Rarely am I more excited to meet somebody. Today, for me, this is a treat. We are interviewing Jonathan Neame. He's the CEO of Shepherd Neame, basically Britain's oldest brewer. Dates back to 1698. And Jonathan tells me off air that they can actually go back further than that. Jonathan, welcome.
Thank you.
So how far does it really go back, Shepherd Neame?
Well, the origins go back to 1573, but even could be even earlier than that. Which makes it the oldest manufacturing site of any product, we believe, in the country. Beer production on that site every day since then. It's quite unusual.
It's incredible. Right, well, I've got a few sort of bullet points. Let's run through. Britain's oldest brewer, based in Faversham in Kent, a family business. Now, beer, Spitfire, Whitstable Bay, Bishop's Finger. I really like the Whitstable Bay. That's a personal favourite of mine. 323 high-quality pubs, hotels throughout Kent, London and the South East. Market cap, 160 million. You are trade on the NEX exchange. The symbol is SHEP, S-H-E-P. You recently had your interims, 6th of April, for the 26 weeks ending 23rd December 2017. Turnover was up 6.3%. Profits up 3.8%. Profits before tax up 2.6%. 2018, trading conditions more challenging. Rate of growth of food sales in our managed estate has slowed. Drink sales performs well. That's a little bit of background. Okay, let's get into the nitty gritty. The British weather, how much impact does that have on your business?
Well, whether we like it or not, it does have a big impact. And I think for a business like ourselves, we've got a good market around the coast of Kent. Coastal regeneration's going on up and down the country, but particularly in Kent, places like Margate are kind of coming back into fashion, Broadstairs, etc. So, the fact of the matter is in 2016 into 17, we had a very warm autumn then, particularly hot August, good September, warm October, and into early 17. This is all our last financial year, good conditions in the spring. This year's been the reverse. In fact, there was one day in September when I think it was 86 degrees the prior year and about 7 degrees this year. So whether you like it or not, weather does have an impact on all consumer behaviour in the retail trade, but particularly if you're linked to leisure activity. I think the other thing is that then impacts people's mindset. So the fact of the matter is also that there is more of a squeeze on consumer expenditure at this time than in the prior year or the prior 2 or 3 years. So wage rates aren't keeping up with inflation. We all know that from lots of other stuff that we read. And so there's a slight squeeze. That may change in the future, but there is a slight squeeze on disposable income. And then if the overlay on top of that is some fairly gloomy, negative political and economic uncertainty, Brexit, whatever, take your pick, all of that can combine to change the consumer mindset in the short term. But equally, conditions can go the other way and people can flip back in. We're now forecast a good heat wave. Obviously, England's going to win the World Cup. So, by June we'll be smiling.
You've been reading my notes. Okay, so on a personal note, I went to Bournemouth this weekend, okay, and I remember that as a family resort, and obviously it's a little bit different now, let's say.
Yeah.
Going to the local Wetherspoons pub, meet my friends, £1.99 a pint, okay. Yeah. In terms of that sort of competition, how do you deal with that?
Well, I don't think price is everything. It's about experience. And equally, I don't think product specific is everything. So what we're about is we are a traditional family brewer with some unique pubs in unique locations. Of our 320 pubs, 220 of them are listed buildings. That means built pre-1700. They've got amazing stories, history, etc., etc. For me, that's a very different experience from a price-led or value-led experience, which is Wetherspoons on the drink side, or a lot of the value family dining offers on the other. And there are three dynamics in the market at the moment. Is that the value-led drinks, Wetherspoons is performing well. Value-led family dining is not performing so well because it's not really, however low the price is not really delivering the experience to go with it. Equally, some of the casual dining operators are not performing so well. We've heard lots of stories about various companies going into receivership, and that is partly because they've selected the wrong sites. In my view, they're too heavily into these sort of new build or out of town type developments, or the reality is that there's just an element of sameness about these offers. They're not giving anything differentiated. And the beauty of the great traditional pub is its relentless ability to reinvent itself. Year after year, every generation has a different challenge to attract the out-of-home experience. But if you've got a pub with intrinsic qualities in the building and you can provide the right quality beer, food, accommodation and service, if you can do all those things in that environment and keep telling the stories, the provenance and the authenticity of that pub, then you will survive and thrive. But also, it's important that you own the freehold, in my view.
Yep.
Take a long-term view,
Yep.
Because then you're less exposed to the vagaries of the property market.
Okay, so in terms of living wages and business rates, big impact on you?
Yeah, these things are an impact. There's no question. I think, for some time the sector has been talking about the perfect storm of inflation coming in, national living wage, rates, as you mentioned, apprenticeship levy to a lesser extent, but that's not really working at the moment. Plenty of people are commenting on that. And then the other big factor in the last year has been food inflation, which is partly linked to currency, partly linked to certain markets like Spain having bad weather conditions, which impacted certain things. So the cumulative impact of that is that people in the hospitality sector are unable to pass on that inflation to the level to the consumers that the consumers can't take that level of price increase, and therefore there is a bit of a margin squeeze in our managed house numbers, in our retail numbers, and other commentators, players are saying exactly the same.
The World Cup 2018. Are you going to have lots of TVs in your establishments, or is this?
The World Cup is always hugely exaggerated as an impact on the sector. I think, in my
Is that because England always go out early, or?
Well, that's partly the case, but I think the only time it makes a difference, I would say, is if England get through to the semis. So I think there was when was it, mid-90s, we played Argentina in a semi-final, and that did have a material impact on a lot of pubs. It became a national event, and sales really did rocket. Otherwise, in the early stages, football-specific pubs do okay, but you know what? It just takes trade out of the dining out type pubs. So it just shifts the market. The off-trade will always tend to do a bit better than the on-trade, but we never factor football into any of our calculations. I mean, over the years, rugby has become a much bigger event for pubs, and that's probably going to stay the way this year. Right.
Okay, I always ask people, putting my old hedge fund hat on, okay, Green King are reporting this week that hedge funds are short 20% of the market cap, or whatever the numbers are. Give me 3 reasons why I should consider having your shares in my portfolio in 2018 and beyond.
I think the thing about Shepherd Neame is that we are conservatively managed. We've always got conservative levels of debt compared to many other operators in the sector. Strong family interest, so I don't see that changing for a very long period of time. We know our local market intimately, and we operate within the same strategic framework, but are always looking for continuous improvement within that framework. I think the third element is kind of obvious, that shares of our type get quite good tax advantages, business property relief, etc. And probably the fourth, if I can throw in a fourth reason, is that a business like ourselves, which has operated predominantly, not exclusively, but predominantly in Kent for 300 years plus, Kent has been the poor relation of the South East for a lot of that time, certainly for the last 50 years or so. And now we're seeing major economic regeneration. We've seen a bit of it, things like the high-speed link, but there's frankly a lot more to go. There's the Lower Thames crossing, there's further extensions of the high-speed link, major conurbations like the Thanet Towns, Ramsgate, Broadstairs, Margate.
A new airport?
Maybe a new airport, who knows? Major development in North Kent, such as Ebbsfleet. Ashford's still a hub which has got something like 20 to 30,000 more houses to go. So, speaking personally, that may have an impact on my local environment. Speaking economically and as a businessman, you can see the population growing, and you can see the average GDP per capita growing and closing the gap between, say, Kent and the Berkshires of this world or the Hampshires of this world.
Right.
Now, we take a long-term view.
Yep.
That is a 20-year view. We're not a company that's ever going to knock the lights out. We're not trying to. What we're trying to do is steady, sustainable, long-term growth for the long-term benefit of shareholders. And there aren't many companies that can think on that horizon these days. And I would say we do that because of the nice balance between strong family interest and non-family interest is kind of a perfect alignment.
My final question, and you have the right to ignore the question if you like. What's your favourite beer?
What's my favourite beer? Gosh, well, it's actually not one of the ones you mentioned.
Right.
Master Brew, Kentish Bitter, Great Boys Bitter, good session beer, perfect balance if it's served in good condition.
On that note, Jonathan, thank you very much indeed for your time.
Thank you very much.